All right, the Q3 numbers for China's tech and EV giants are in, and frankly, they paint a picture of a market with some stark contrasts. We're seeing some companies just absolutely thriving, while others are facing a really brutal reality. Let's break down the winners and the losers. The landscape is genuinely divided. It's a tale of two markets, really. As you can see in some sectors, the pressure on margins is just immense. But in others, companies have found these incredibly profitable sweet spots. And then you have the EV race, where we're learning the hard way that just selling a ton of cars doesn't always mean you're making any money. So, let's start where the headwinds are the strongest, e-commerce. The story here is all about intense, cutthroat competition, and it's leading to a really severe squeeze on profitability. Let's just start with this, a pretty staggering number. Alibaba's core net profit absolutely plummeted, down 71% year over year. And what's really striking is that this happened even though their AI and cloud divisions were actually seeing some pretty solid growth. And this pain, well, it wasn't just an Alibaba problem. Look at Meituan, another huge player. They swung dramatically from a 10 billion RMB profit to a core net loss of 16 billion RMB this quarter. I mean, that is a massive, massive reversal of fortune. So, what on earth happened here? Well, it was basically a strategic bleed-out. A brutal price war forced these companies to pour billions into subsidies and discounts, all just to hang on to their market share. The effect, as you can see, was a pretty catastrophic compression of their profit margins. But it's not all doom and gloom. If you look away from that e-commerce battlefield, other sectors found their sweet spots. And these companies aren't just surviving, they're actually thriving. And this is really the crucial question for anyone watching this market, right? If the absolute giants of e-commerce are struggling this badly, where is the real money actually being made in China's internet space right now? Well, here's your answer. Tencent. They delivered a really powerful counter-narrative. Their core net profit surged 18% year over year. Just a completely different story from what we're seeing in e-commerce. So, what's powering all this? It really comes down to their dominance in gaming. I mean, look at these numbers. International gaming revenue just exploded, up 43%. Overall online gaming, up 23%. You combine that with some smarter AI-driven advertising, and boom, their core net margin shot up to a very healthy 36.6%. And Tencent wasn't the only one finding success. Trip.com, the online travel behemoth, also put up some really resilient results. They posted a solid 15% increase in revenue year over year, as you'd expect, with travel continuing its strong recovery. And this, right here, this is really the key takeaway from the entire internet sector this quarter. This quote sums it up perfectly. While e-commerce is stuck in this brutal war of attrition, companies like Tencent and Trip.com are proving they are perfectly positioned in the two undeniable sweet spots, online gaming and online travel. Okay, so let's shift gears now to the electric vehicle market. Because, funny enough, we see this exact same theme, this divided landscape playing out all over again. It's a race not just for sales, but for actual, sustainable profitability. And this is the fundamental problem in the Chinese EV space right now. It's one thing to post triple-digit sales growth and get all the headlines, but turning that into a healthy bottom line, well, that is proving to be a much, much tougher challenge. I mean, this table just lays out the very different paths these companies are on. You've got XPeng growing sales at a blistering pace, but still losing money. Then there's Li Auto, which is actually going in reverse. Their revenue is down, leading to a pretty big net loss. And NIO, well, despite some revenue growth, they still seem pretty financially vulnerable and are trying to find that clear path to actually making a profit. And if you look ahead, the entire sector is now staring down a really critical challenge, one that could completely reshape the competitive landscape. And here it is. The nationwide tax exemption on EV purchases, which has been a huge driver of sales for years, is set to end. You have to understand, this subsidy has been propping up demand in a major way, and taking it away is going to be a true test for every single one of these automakers. So this is the big question we're all left with, isn't it? When that government support is gone and the already fierce competition gets even more intense, which of these companies truly has the brand, the tech, and the financial discipline to not just survive, but to actually thrive in this new era? That remains the critical uncertainty as we head into 2026.